life insurance premium paid by a corporation on behalf of its employee. So the corporation is paying and the benefits are the employees. Are deductible for financial reporting purposes to arrive to book income regardless of who the beneficiary of the policy is. Is this a correct statement? Or are not deductible for tax purposes if the corporation pays the premium on behalf of the employee and the employee can name the beneficiary of the policy. So here what they're asking you is, do you know how do we treat life insurance premium paid by a corporation, listen to me carefully, on behalf of the employee? Look, if the corporation incurring an expense on behalf of the employee, that expense is deductible. That expense is deductible. If you're paying on behalf of the employee, that expense is deductible. Therefore, I would say A1 is correct, are deductible for financial reporting purposes to arrive to book income regardless of who the beneficiary is. So as far as book income, it's deductible. Now, number 2, it says, are not deductible for tax purposes if the corporation pays the premium on behalf of the employees and the employee can name the beneficiary of the policy. Now we have to be very careful. So we already know that they are deductible for book income. If it's an expense, it's an expenditure, it's deductible. So we're gonna keep A because A has 1. We can take out B. We keep C because 2 could be right, and we could eliminate D because we know 1 is correct. So now all what we have to do is to find out if this statement is correct. If this statement is correct, the answer is C. If this statement is not correct, the answer is A, which is 1 only. We have to read this very carefully. Are not deductible for tax purposes, and the life insurance premium, we have to be careful about this because we know in certain circumstances they're not deductible and they're not taxable. Why? Because when we settle life insurance, by law, it's not taxable. So life insurance proceeds. So if we receive life insurance proceeds, they are not taxable. That's what we know. And if something is not taxable, it's also not deductible. Simply put, if I'm not going to allow you to, I'm not going to tax you on it, I'm not going to give you a deduction. That's what that's what the IRS is saying. But we have to read this problem very carefully. Are not deductible for tax purposes if the corporation pays the premium, that's fine, on behalf of the employees, and the employee can name the beneficiary of the policy. That is true. When it's not deductible and not taxable, if the company is paying the premium and the company itself is the beneficiary. So the company gets the money. That's not the case here. Who's going to get the premium? The person, the individual, the employee. And the employee can name the beneficiary of the policy. So that's why that statement is not correct. If the proceeds were to go to the corporation, then the premium is not deductible and it's not taxable. But that's not the case here. Therefore, 2 is not a correct answer. The answer is A1. So you have to be careful. It's not deductible and not taxable if the corporation is paying that premium and the corporation is getting the proceeds. That's not the case. That's not the case.
Want to see more CPA exam multiple choice questions solved step by step? At farhatlectures.com, you will get hundreds of video solved MCQs step by step, including previously released AI CPA questions, previously released AI CPA simulation, in-depth lectures and resources to prepare for the CPA exam, AI tools that's going to help you study smarter, not harder, CPA exam podcast lessons where you can learn on the go. And also you will get the personal guidance of support of Farhat and his team. If you are serious about passing the CPA exam, this is your next step. Visit the website farhatlectures.com, start your free trial, and I hope to see you on the website.